European markets are feeling the chill as the US-China trade war looms large. Despite a Wall Street rally, European stock markets opened on a gloomy note, reflecting the ongoing tensions between the world's two economic giants. The trade war's impact. While US President Donald Trump tried to reassure investors about his relationship with Beijing, the market sentiment remains fragile. The two nations are set to impose fees on each other's ships, with Washington charging $50 per ton of cargo on Chinese vessels, and China responding with a levy of 400 yuan per ton, which we increase over time. This move follows an investigation into China's growing dominance in shipbuilding. China's maritime move. On the same day, China took a bold step by imposing sanctions on 5 U.S.-linked subsidiaries of the South Korean shipbuilder Hanwha Ocean. This action is part of China's strategy to assert its dominance in maritime trade. Uncertain trade talks. The status of trade talks between the U.S. and China remains unclear. Trump has hinted at a potential meeting with Chinese leader Xi Jinping later this month, but his previous threats of 100% tariffs on China and his social media posts have added to the confusion and uncertainty. European caution. European investors are not just concerned about the US-China trade war. The new French government, led by Sébastien Lecornu, will address Parliament today, aiming to bring political stability and tackle France's heavy deficit. Meanwhile, the UK's rising unemployment rate, now at 4.8%, is causing jitters about the health of its economy. Market downturn. European stock indexes and US futures are in the red. The FTSE 100 in London, the CAC 40 in Paris, and the DAX in Frankfurt all experienced declines. The European benchmark STOXX 600 and the IBEX 35 in Madrid followed suit. Across the Atlantic, SP 500 and Nasdaq futures also fell. Currency and commodity movements. The euro and the British pound weakened against the US dollar, while the Japanese yen strengthened. Oil prices tumbled, with U.S. benchmark crude falling over 2%. Gold and silver prices, on the other hand, soared as investors sought safe haven assets, with gold prices reaching $4,156 and $80. Cryptocurrency slide. Cryptocurrencies took a hit, with the CoinDesk Bitcoin price index dropping by 3.5% and Ethereum losing more than 6.4%. Global market outlook. Global markets are now focused on earnings reports, but there are concerns about an AI bubble that could burst. Tech company valuations have skyrocketed, and critics argue that the U.S. market is overvalued. The upcoming earnings reporting season will be crucial, with big names like JPMorgan Chase, Johnson & Johnson, and United Airlines releasing financial updates. And this is the part most people miss. The potential impact of an AI bubble bursting on the global economy. What do you think? Is this a real concern or just a temporary blip? Share your thoughts in the comments.